It was jobs week, but unfortunately, we didn't see improvement in the mortgage bond market. It was pretty rough. The BLS jobs report for October showed a lot less job creations than expected. Ignoring government jobs, it actually showed job losses, which should help the bond market, but unemployment actually stayed flat thanks to rounding. ADP showed 148,000 job losses from small businesses, but the birth death model in the BLS report showed 368,000 job gains, which just doesn't make sense. The job reports numbers, JOLTS, which is job openings and labor turnover, showed a much weaker labor market. 22,000 government jobs lost, but BLS showed 31,000 new government jobs. And get this, the household showed 785,000 government jobs, which is an 800,000 difference in jobs compared to JOLTS. And something else that didn't make sense to me was a report showing consumer confidence is at a 9-month high. That seems pretty crazy with consumer debt at all-time highs and savings being depleted. We got the employment cost index, and it showed its lowest level since June of 2021, which is a good sign for the Fed's inflation goals. The latest PCE numbers, which is the Fed's favorite measure of inflation, showed slight improvement, but shelter costs in CPI and PCE are still just not catching up and are showing much higher than real-time figures. We did see a dip in oil prices this week, and we'd love to see that continue and help inflation readings. In the housing market, we got mixed signals. Pending home sales were up in September, showing demand, but high rates do continue to weigh on affordability. Case-Shiller and FHFA did show steady appreciation in home prices, but it was slower than it's been, but that's kind of normal for this time of year. And going back to real shelter costs, rents are actually cooling off. Apartment list is actually showing declines year over year for new rents, but renewals do remain higher, and this does make sense because moving costs and the inconvenience of moving make it easier to raise rents on people who just don't want to be bothered with moving. Next week, we have the Fed's decision and the election. The Fed is still expected to announce a 25 basis point cut with some chance of a 50-point cut, not counting on that. But I'll be back next week to talk about how the election and the Fed's decision are going to drive rates moving forward. If I can help in any way, including with business planning for next year, just say the word. Have a great weekend.